Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. The mouse bounces back. Disney shareholders have been in a world of pain for the better part of the past 3 years. The stock reached a high at around $200 a share back in early 2021 and has been trending lower ever since, reaching a low point below $80 a share for a decline of more than 60% from its highs. Now, what's even more frustrating for Disney investors is that this occurred during a period in which the overall stock market did quite well, albeit with a few bumps along the way. But that all changed this past week when Disney reported stronger than expected earnings and sent the stock up more than 12%, back above $110 per share. Now, despite weaker streaming numbers for Disney Plus, management did give investors a sense of optimism that earnings would be on a growth trajectory going forward as cost-cutting measures help revenue drop to the bottom line. After a relatively short hiatus, Bob Iger is back as CEO, and the stock price is acting more like it did when he was previously at the helm. Only time will tell if he can keep things moving in the right direction. For this week's featured insight, dividends and total return. Now, in the age of go growth stocks and ultra short-term time horizons for fast money traders, many investors have completely forgotten about dividends as a key source of total return. In fact, dividends have contributed a full 1/3 of the overall stock market's total return in the past 100 years. Not too shabby. Even some of the hot growth companies in tech-related sectors have begun to consider dividends as part of their overall capital allocation strategy. For example, Meta Platforms, formerly known as Facebook, instituted a dividend of 50 cents per quarter during its most recent earnings call. And while that represents only about a 0.5% yield, it's likely they will look to continue to grow that dividend going forward, as most companies aspire to do. Another fun fact, that dividend will amount to roughly $700 million a year in income for Facebook founder Mark Zuckerberg. Looking ahead, all eyes on the consumer. The consumer makes up roughly 70% of the American economy. The consumer's spending, that is. Thus far, many economists and market participants have been surprised at the resilience of the consumer. There have been fears of recession and a limited amount of spending power going forward due to credit constraints, inflationary pressures, and dwindling savings. And while credit card delinquencies have been on the rise, they are still at historically rather low levels. And debt-to-income ratios are actually relatively modest. We'll get some key data next week on retail sales, the latest consumer price inflation reading, as well as consumer sentiment. And as long as all the data continues to show a robust and resilient consumer on Main Street, it's likely the party on Wall Street will continue as well. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.